for the people that ain't here. There we go. Can you see the presentation? Yeah. Okay, cool. Yeah, so basically last time we sort of had an overview of trading in the strategy that I use for HFX, but it mainly sort of covered trending phases in the market. So this week, we're just going to be talking about consolidation trade setups and when these occur during the market, and what you need to look for in order to get in on the consolidation trade setups. So again, the 3 steps you need to enter a trade is to identify a market phase. And as I said today, we're going to be looking at consolidation market phase. And then the second step that you need is to confirm your trade or your phase that you're in. And you can do that with technical indicators. And then the third step is the final step, and that's a trade entry reason. And that can be things like confirmation candle, breaker structure candles, or specific technical indicators that you deem to be a trade entry reason. So I can hear someone. Someone's like not. Make sure you're. Yeah, there we go. Okay, so indications that you are in a consolidating market or in a consolidating phase in the market. The first indication that you will get is that price will move through the middle moving average line, so the 20 MA. The second indicator is that price will be trapped between a support and a resistance. The third indication, if you look at your currency strength indicator, if the currency strengths of both pairs are similar, then you could expect to see some sort of consolidation phase. And then the fourth indication is that you'll notice that price is getting bounced between the top and the bottom Bollinger Band, or the red and the blue. So that's another good indication that you're in consolidation, because if you was in a trending phase, normally the price would hug one Bollinger Band. So if it's in a downtrend, it'd hug the bottom Bollinger Band, so the green one or the blue one, and then vice versa for an uptrend. So if you see that price is bouncing off of both the red and the blue Bollinger Bands, and that's a good indication that you're in a consolidation market phase at that moment in time. The technical indicators that we use will be the same. So it would be the RSI indicator and the stochastics indicator. And it's the same key numbers and the same zones on the stochastics that we're looking for. But it will be slightly different, obviously, to you'd look for the plot lines to be in different places than what they would be if you was in a trending phase. So it's very important to note that down, because if you try and use a trending phase strategy in consolidation, and you're most likely going to lose. And then if you try and use a consolidation strategy when the phase of the market is trending, then you're most likely to lose as then. So always make sure that the technical indicators match your thought of what market phase you're in when you're looking at the charts. So because we're looking at consolidation, the main price action patterns that you'll see in the consolidation phase are these two that are on the screen, and they're also known as reversals. These can happen. So obviously, say you're in a downtrend, and then the market moves up and it crosses over the 20 MA, and it breaks structure, so it breaks price action, and then it creates a support. Then you're most likely looking for it to come down and give you a confirmation for a reversal. And then obviously the same, if it was in an uptrend and it was moving into consolidation, you'd look for the same confirmations. And then the one on the right is the same trade, a reversal trade. But a lot of people get confused because there can be different zones of consolidation within consolidation. So price won't always, all the time, make it all the way back to the other Bollinger Band or the opposite Bollinger Band. And then it can stop and then it can reverse halfway through. And people might look at that as maybe it's coming out of consolidation and going into a trend. But really, if you're looking for it to come out of consolidation, really you're looking for price to break either the support or the resistance. So just keep that in mind that obviously during consolidation, price isn't going to move perfectly from your support to your resistance, and then from your resistance to your support all of the time. So just keep that in mind when you're looking at the charts. All right, so this is the strategy that I use for times of consolidation. So as you can see, price was in a slight downtrend because it was making lower lows, higher lows, lower low, higher low, lower low. So when price broke this lower, made a new lower low, what we'd be looking for there really is for price to come back up, which it did. So you can see it come back up to that previous low, and then you had a red confirmation candle. But the reason why we wouldn't have got into this trade as a continuation of the downtrend is because if you look at that red candle at the moment in time, you didn't have a cross down of the stochastics. That's why I always like to wait for the confirmation candle before I enter the trade, because the plot line, it can come down past the red and you think, oh yeah, cross down, and you get in, but then when the candle closes, the plot line goes back up and then price continues to go up. So that's why I like to wait for a confirmation candle. But yeah, we wouldn't have got into this because, as you can see, we didn't have the cross down on the stochastics indicator, and then quite immediately afterwards, you can see that prices continued up. So this is where I'd start to think that price might be coming into some sort of a consolidation phase, because price is now it's broke through that 20 moving average line, and obviously if we're looking at price structure, you can see that in the past, when it was in that slight downtrend, we had a lower low, a higher low, and then a lower low. So you can see that price has now broke out above that previous lower low and the previous higher low. I'm sorry. So that's another indication that price is going to, for the next few candles at least, is going to be going up, because not only has it crossed over the 20 moving average line, it's also broken structure. So the structure was obviously showing a downtrend, but then prices broke that structure. So I would no longer be looking for continuation of the downtrend. And then obviously, so to go to the confirmation checklist, sorry, what I look for is price to cross up over that 20 MA. And obviously you can see that price, obviously, as I just said, has broke structure, the downtrend. So that's another indication for us. And then the next confirmation would be that price, for price to be at the opposite Bollinger Band. And what I mean by that is, so you can see as we're in this downtrend, you can see that price is sort of is in contact with the green Bollinger Band as it's coming down, but it doesn't really have any contact with the top Bollinger Band. So that would be classed as our opposite Bollinger Band, the red one, because price is currently coming down on the blue Bollinger Band. So price is crossed up, and now price is at the opposite Bollinger Band, so it's now at the top, at the red band. And then the next thing that I would look for is the stochastics indicator to be oversold or overbought. So as you can see here on the stochastics indicator, at the time that price had crossed up and come to that opposite Bollinger Band, the stochastics indicator was overbought. And then obviously once we have the red confirmation candle, you can see that you get the cross down through the red line. So that's the stochastics confirmation. And then moving on, we have the RSI indicator. And to really solidify for me whether I'm in consolidation or a trend phase, I like to use the RSI indicator because it is a momentum indicator. So it tells you whether the buyers are stronger or the sellers are stronger in that time in the market. So when the RSI indicator is stayed in between the 60 and 40, then that indicates to us that price is now in or entering a consolidation phase. So just to go over it from the top, the price had crossed up the 20 moving average line. It's now at the opposite Bollinger Band. The stochastics is over bought and is crossing down. The RSI plot line is in between the 60 and the 40. And then obviously we have our red confirmation candle, and then I'll enter at the close of that red confirmation candle, and I do a 3 candle rule. So it's a 15-minute trade, and then you can see 1, 2, 3 candles, and that trade cleared. Now I know some people like to trade 1 candle rule. So like if you're looking at a 5-minute chart, a 3-minute trade, and that's absolutely fine. You know, you can do that. So it's just about like using it for yourself, back testing, spending time on the charts, and then you'll find and figure out what works best for you. So yeah, I just want to go over one more example with you. So as you can see with this example, we can see that price is sorry, can you still hear me? So I just had a message pop up saying that there was something to do with the mic. Yeah, okay, cool. I'll just ignore that then. Yeah, so so with this example, you can see that price is from this moment is in a small downtrend. And we know this because if we look at the RSI, which is our momentum indicator, we can see that plot line is at the 40 and below the 50% line, which indicates that most of the momentum is with the sellers, and most of the momentum is going to be coming down in price. So we can see that price has come down, and it's made this lower low here. So this is our support. So price has come down, it didn't break through, and then it's broke through that support, that floor, and it's created a new lower low down here. So then price is then retraced back up to that previous support, now using it as a resistance. And then when price comes up and touches that zone, you can see that the stochastics indicator is overbought, and the RSI indicator, the plot line, is still below the 50% line, which indicates that the momentum is still in favor of the sellers. So yeah, you would enter at the close of this confirmation candle, because this confirmation candle is what makes the plot line on the stochastics cross through the red line. So that's why I always use the confirmation candle rule for myself. So yeah, so we have the confirmation candle. You'd enter at the close of that candle, 1, 2, 3 candles, 15 minutes. that breakout and retest trade would have cleared. Now, this is why I really saved this one, because you can see quite clearly, like, we was in a downtrend. We just executed a trade based on our trending strategy of a breakout, retest, and our confirmations, and it's clear. So we would expect to see that price would therefore carry on in the trend, probably break through this lower low and then come back to retest and then to carry on in the trend. But what we can see is, so price has come down for the trade that we executed, which makes us believe obviously the trend is going to be continued. But then you can see that price has come back up, and what's happened is price has now moved above that 20 moving average line, and as you can see, we're talking about price structure. You can see we had a lower low, and this is our new higher low. So in order for us to be looking for trades, for put trade, so to carry on in the downtrend, we would want to see that this level here is respected, and the price doesn't break above that, because obviously if price broke above that, our most recent higher low, then it would indicate that price is no longer going to carry on in the downtrend. So price has come up, and you can see that many a times we've got 1, 2, 3 big wicks there. So you can see that price has pushed past our most recent higher low, but the candle, it hasn't closed above that higher low. It's sort of on par, but obviously, as you can see, with all the rejections and the wicks, you might think that, okay, price is struggling to break that high low, and that we will end up continuing in the downtrend. So obviously we have our rejections here. We can see with the wicks, and then price has come down, and as you can see, we have a massive pin bar candle or a reverse hammer, which indicates to us that price come down and it's touched this support, which is where our most recent lower low was, and it's rejected completely, which tells us that price is not going to continue going down, because it's such of that massive rejection. And also coupled with this, you can see that the RSI plot line is slightly broke above the 50% when it was trying to break above our most recent high low here, and then it's come down to the 40, and then it's broke through that 50% line there, and the plot line is no longer coming down below past the 40, so it's staying in between that 40, and obviously it's broke through the 50 and it's staying in between the 60. So the plot line has moved from being underneath the 40 and the 50 to now in between the 40, above the 50, and in between the 60. So that indicates to us that the momentum in the market is changing, and that we might be entering into a consolidation phase. And obviously that's coupled with that we know that price has tried to break price structure. There's been a lot of rejections, and we can see that when price did finally come down to our last lower low, it did not break that price structure. It's equal. So that's another indication that price is not going to continue in the downtrend as of yet anyway. Like it's not going to carry on down indefinitely, because it probably will end up, as you can see, slightly coming back down. But just for the time that we're looking at it here, you can see that price is not breaking that structure to continue the downtrend. And then obviously, as you can see, price has then come up and it's crossed through that. So if we go through our confirmations again, price has crossed through the 20 moving average line, and the price has come up now to that opposite Bollinger Band. So it was on the blue Bollinger Band in the downtrend, and now price has come up and it's at the red Bollinger Band. And then at that moment in time, you can see that the stochastics indicator is overbought. And obviously our RSI plot line is in between the 60 and 40, which indicates a time of consolidation. And then obviously when we have our red confirmation candle at the Bollinger Band, it gives us our cross down through the red stochastic line. And then obviously you would enter on the close of that candle, and then 1, 2, 3, it close down here. So that trade would win. And I just wanted to show you that example because you really need to learn and focus on what the candlesticks are telling you, because the candlesticks are the language of the market. Like for me, I don't speak Spanish, right? So if I went and spoke to like a Spanish person, I wouldn't have a clue what they were telling me. And it's the same for trading, right? You want to know what's going on with price. You want to know where it's going to move. But you don't understand what it's saying because you don't understand what the candlesticks are telling you. You need to know the different candlestick patterns, different price structure and price action that happens. And you need to know what candlestick patterns and technical indicators you can use to help you to identify when price is moving from a trend to consolidation to expansion, back to consolidation, back to a trend. So you really got to know and look and understand what's happening, because a lot of people would believe that this trade would continue to go down in the downtrend. But in reality, we're not in a downtrend anymore. Our RSI indicators told us that. Our candlesticks have told us that. Yeah, so just make sure you're completely focused on what's happening, because it can get confusing. But obviously, the more you look and the more time you spend on the charts, then the better you'll get at it. And the easier it will become for you. So yeah, that's pretty much it really. I mean, if anyone's got any questions or anything that they want to ask, then yeah, you can put them in the chat or unmute yourself or whatever. Nope. If there's no questions, then obviously I hope you took notes, and it is recorded, and I'll put the recorded link into the group so that you can rewatch it. I would advise to rewatch it. I watch videos, like I watch the same video every day about price draft and about HFX that I watched when I started a year ago, and I've watched it every single day since for the whole year. And I know that every word to all of to that whole video. But just stay consistent, stay committed, and you know it will come for you. Good. Made a lot of sense. Smashed it. Thank you. Thanks everyone for jumping on as well. Lovely. So yeah, you're free to go whenever you want. Thanks for jumping on.